Dollar Swiss daily forecast December 21st, FXEmpire.com. The dollar Swiss had a bearish day on Tuesday as the dollar got sold off in general. However, the pair only managed to sell off to the all important 93 level, as you can see, and actually formed a bit of a hammer. This level was the site of a recent breakout, so this is simply, at least in our opinion, a breakout, a retest, somewhat of a confirmation, and if we can get above the highs for the Tuesday session, we think that is an actual confirmation of the move higher. The 95 level did line up nicely with the Swiss National Bank's announcement on Thursday, which is the long red candle, that they were not, or I should say a lack of announcement, that they were going to raise the floor in the Euro Swiss pair, which would have effectively sold the franc down across all markets. Now that the short-term momentum players have been taken out of the market, as it looks like they were trying to step in front of a potential announcement, there really is nothing to keep the Swiss from doing this. But looking at the economies, the United States seems to be in fairly decent shape, not great shape, but much better than Europe. And while this isn't Switzerland, it is Switzerland's problem. Switzerland's number one export market is the European Union. This is exactly why they put a floor in the Euro-Swiss pair. With this in mind, it does look like the Europeans are going into recession for 2012, and as such, the Swiss will almost undoubtedly pay for that as well. Because of this, it makes sense that this pair would rise. Also, you have the US dollar being the safe haven, and in times of recession, if Europe goes into recession, it is very bad for the economic forecast for the globe in general. And as such, the safety trade goes back into vogue and people start buying the dollar. So there are several different reasons to own this pair. A break into 95 does send us higher, and we think eventually we will see parity, which is about 700 pips above here. Whether or not we get above parity, that will be a completely different struggle. But having said that, the slow upward grind looks set to continue, and a break of the highs on Tuesday does have us buying again. So do any dips that we see along the way, as long as we can stay above the 90 mark.